Because if we see unemployment rise, and that's a big warning signal. More than 32,000 people lost their jobs. Having said that, all those jobs were obviously full-time, good-paying jobs. Can they replace that job? Probably, but not with the same pay, not with the same security, and not with the same company. Which brings us to the other problem, and that is the cash flow. So majority of the people in the market today have that issue with the cash flow. Businesses have the issue with the cash flow. In 2025 and 2026, a huge chunk of Canadians will renew their mortgage. More than 1 million people will renew their mortgage. From the small ones and the small twos will all of a sudden overnight jump into the fours and fives, right? So that is the big burden. We have to understand that majority of Canadians live paycheck to paycheck, and some of these investors see a huge deficits, right? So what is the plan? It is hard to say because everybody's situation is completely different. Now, also having said that, a lot of people have different buffers, right? Like I've spoken to people that bought certain investment properties and they're writing high mortgages and whatnot, but they're relying on that particular segment, which is called debt, line of credit, and they're hoping that within time they will beat this inflation, they will beat the dip, and everything will come back to normal. The lights will get back on in 2025 and 2026. I personally think that some of these folks will be in a lot of trouble because they're depending and they're hoping that the spring market will show these high numbers and that the market will start moving, right? So when we're talking about recessions and stuff like that, in order for a government or for a country to declare the recession, right? Like they will need to be 100% certain that we are in a recession. They will not just declare there is a recession, right? But however, we're seeing that the market of February of 2025 has been the worst ever recorded.